Welcome back to the deep dive, where we like to say we take a mountain of research and kind of boil it all down to the good stuff. And today we're diving into a listener request, right? CarMax. We're going way beyond just the quick headlines and really trying to understand the recent performance, like what's really going on and what it might mean for, if you're thinking about, is this a company to watch? Is this a company to invest in? What's the deal? So we've got analyst ratings, we've got insights from Benzinga. I always love Benzinga. We've got CarMax's own words, right? Straight from the horse's mouth from their Q2 2025 earnings call transcript. And big thanks to the Motley Fool for having that available. And we're going to even spice things up a little bit. We're looking at options activity analysis from NASDAQ. We got short interest data again from Benzinga. They're killing it. And a little scorecard style analysis, always fun. And a trading checklist from Volkowski.com. So buckle up. CarMax, here we come. So for anyone who maybe has been living under a rock, CarMax, they're the king of used cars here in the US, right? The biggest used vehicle retailer around. But here's the thing, even at the top, right? They're still hungry, still looking for more market share. So let's jump right into Q2. What's going on under the hood? Well, Motley Fool headline tells us they beat those revenue expectations and they met earnings expectations this quarter. But even more interesting, they actually increased retail unit sales. So that's more cars sold, right? Which is kind of wild considering the used car market's been down for, get this, 7 quarters in a row. And on top of that, their gross profit per used car stayed strong.
Yeah, I mean, that's the impressive part for me, right? Because they're doing this in a used car market that's been, well, it's been rough out there. Their competitors are struggling. So it seems like CarMax, they're doing something right, especially when it comes to getting their hands on used cars.
Right. Like their sourcing strategy is working. But, got to look at the whole picture here. Analyst sentiment over on Benzinga, it's a mixed bag, right? You got buy, you got hold, you even got an underweight rating. So not everyone's totally sold. The average 12-month price target, that's sitting at $82.17, which is up a little bit, like 4% from the previous average. But, analysts, they got to have their range right. The most optimistic, looking at $95.
Yep.
And on the flip side, the most bearish, they're down at $65. Wedbush, they're leading the cheer squad at $95. And JT Morgan, they're tapping the brakes a bit at $65.
Yeah, and I think that kind of spread just shows you how complex this really is. There's opportunity for sure, but there's also risk. Not a simple, should I buy it or should I sell it situation. This is where things get interesting.
I agree, 100%. So let's break it down, right? What challenges is CarMax dealing with? Because no business is an island, right? First off, used car prices have been dropping for 7 quarters straight. Great for buyers, not so great for profits, right? But the auto loan market, oh boy, that's a whole other can of worms right now, right? CarMax, they increased their loan loss provision this quarter, and not by a small amount, which tells me they're worried about more borrowers, defaulting on their loans.
And they're not alone, right? This is an industry-wide thing. Other lenders are nervous too. I mean, think about it. Inflation, interest rates going up. It's getting tougher and tougher for people to keep up with their car payments, And, sometimes when you see those loan loss provisions going up, it can mean, hey, we're not so sure about the loans we've already made either. It'd be interesting to compare the provisions to, some of their competitors. See if it's just CarMax or if everybody's feeling the heat.
Yeah, for sure. And to try to, get ahead of this whole thing, CarMax has been tightening up their lending standards. So basically, it's harder to get a loan from them now. Which makes sense, right? They're trying to reduce their risk. And then you've got their own financing arm, right? CarMax, Auto Finance, CAF. Huge part of their business. But even CAF is feeling the pinch. Their income's down from last year, again, because of those loan loss provisions. Just goes to show, even the big dogs aren't immune to the economy doing its thing,
For sure. But here's where I think it gets juicy. CarMax, they're making moves to become what's called a full-spectrum lender. So they're trying to lend to a much broader range of borrowers, people with all sorts of credit scores, even the riskier ones. It's a bold move, right? Especially now when things are so uncertain. But if they pull it off, it could be huge.
It's a gamble, right? High risk, high reward. But, it's not all doom and gloom over at CarMax. They're making some really smart moves to adapt. Like they're going all in on digital, and the analysts over at Oppenheimer are noticing. They've rolled out this whole new online order processing system nationwide. So if you want to buy a car from your couch, they're making it happen. Even testing out these personalized shopping accounts. So your own little corner of the CarMax website.
You know what I like about that?
Yeah.
They're not just selling cars, they're building a relationship with the customer, right? And making it personalized.
Exactly. Oh, and speaking of adapting, they've also launched an EV hub on their website. Smart move with EVs getting so much buzz.
That is smart. They're getting ahead of the curve. I mean, everyone's curious about EVs. Now they go to CarMax, learn a little bit, maybe even buy one. It's a good strategy. What I find interesting is the balancing act they're doing. Short term, they've got these profit pressures, but they're still making these long-term investments. Tells me they're confident about the future.
Yeah.
You know, they believe they can adapt and thrive as the car market changes.
Totally. So let's bring it back to our listeners, right? What does this all mean for you? Should you be investing in CarMax? Well, that's up to you, right? Depends on your investing style, how much risk you're comfortable with. But here's some things to think about. Benzinga's data shows that short interest in CarMax has actually gone down recently, so fewer investors are betting against the stock. Maybe a sign that sentiment is shifting a bit, becoming more positive, you know? And if you look at options activity over on NASDAQ, it looks like investors, they're thinking CarMax will trade somewhere between $75 and $85 in the coming months.
Remember, past performance doesn't guarantee future results, right? But these are data points, clues about how other investors are viewing CarMax right now.
Exactly. So we've learned a lot, right? Investing in CarMax, it's not as simple as, just glancing at their earnings report. You got to look at their strategy. You got to understand the whole market situation. What are the risks? What are the potential rewards?
What jumps out at me is their commitment to innovation and efficiency. Even with all these challenges, they're not standing still. That tells me they've got a good shot at coming out ahead in the long run. Something to keep an eye on for sure.
I agree. Okay, so here's something for you to chew on, listeners, as you're thinking about all this. Let's say CarMax. They navigate all this craziness, right? Economy, used car market, all of it. And they come out even stronger. Could they be on the verge of some really significant growth? Could they just, take off? Something to think about, right? That's what makes these deep dives so fun. But we've got one more source to tap into, Bukowski.com. And they've got this awesome trading checklist specifically for investors like you. And one of the things they emphasize, and I think this is crucial, is to always look at the bigger picture. What's happening in the overall market? What's happening in the industry?
Yeah, it's easy to get caught up in the individual company, right?
Yeah.
But you got to zoom out. What's the economy doing? Interest rates, inflation. All that stuff matters because it impacts even the best companies out there.
Totally. It's like a rising tide lifts all boats, but if the tide goes out, even the best boat can get stuck. So as we keep going with CarMax, let's remember, they've got a lot going for them. Proven track record, strong brand, good leadership. They're adaptable, But they're also facing some serious challenges, both within the company and because of, the world we're living in. Will they overcome those challenges? Will they achieve that crazy growth potential? I don't know. But it's going to be exciting to watch.
Absolutely. And that's the beauty of business, right? Always changing, always exciting, new challenges, new opportunities. The key is to stay curious, stay informed, and, keep taking those deep dives with us. That's how you become a smarter investor.
It's kind of wild, right? A company like CarMax, they're like the big kahuna in the used car world, but they're still facing all these curveballs. It really shows you just how unpredictable the business world can be, even for the giants, And speaking of unpredictable, we got to circle back to this whole full spectrum lending thing, right?
Yeah.
I mean, it's risky, especially now, but it could also be like a total game changer for them.
Yeah, it's definitely a gamble. You're talking about lending money when things are shaky, interest rates are up there, consumers are worried. Could mean a lot more loan defaults for CarMax, which obviously is not good for business.
Yeah.
But, and this is big but, if they can figure out a way to manage that risk, like really carefully choose who they're lending to, it could give them this huge advantage over everyone else.
Right. It's that classic risk versus reward dilemma. And that seems to be a theme with CarMax, they're always trying to walk this tightrope between short-term profit and their long-term goals.
Exactly. Which brings us back to those digital investments they're making.
Right.
That's smart, no matter what happens in the short term.
Right. Yeah. I mean, that new online order system, the personalized accounts, the EV hub, they're not just reacting to the market. They're anticipating what's next.
By focusing on the online experience, they're not just limited to customers who walk onto a physical lot anymore, right? They can reach anyone, anywhere, expand their customer base, grow their market share. That's huge.
It's brilliant. Okay, but let's not forget those analyst ratings, right? Some were super bullish, others not so much.
And it's important to understand why, right? Why are some analysts so gung-ho while others are hitting the brakes? Take Wedbush, for example. They slapped a $95 price target on CarMax. Why? Probably because they're impressed with their brand, their size, and those big, bold moves they're making.
Right. So what about JP Morgan then? They're down at $65. What are they seeing?
My guess. They're probably more worried about those macroeconomic headwinds we keep talking about. Inflation, interest rates, the economy may be slowing down. That stuff could really put a damper on car sales.
See, it's all connected, right? It always comes back to the bigger picture. So listeners, what do you think? Is CarMax a good investment for you?
That's the million-dollar question, isn't it? And unfortunately, there's no easy answer. It really comes down to your own goals, your risk tolerance, and what you think about CarMax's long-term potential. If you believe they can weather this storm, really leverage those investments they're making and come out on top, then yeah, CarMax might be a good bet.
I love that. Okay, so before we completely wrap up our CarMax deep dive, I want to touch on one more thing from that Bolkowski.com checklist. Remember how they stressed looking at the whole market, the whole industry, not just CarMax in isolation?
So important. It's like you can't just look at a single tree and understand the whole forest, right?
Exactly. Used car market's been down for 7 quarters in a row.
Yeah.
7. That's got to factor in, right?
And falling prices, well, that sounds good to consumers, but it can really squeeze profits for companies like CarMax. It's a tough situation.
And then on top of all that, you've got the overall economy. We're talking about inflation, interest rates, and, this looming possibility of a recession. All of that impacts how much people spend, how much they borrow, everything.
Yeah, and that uncertainty, that volatility makes it super hard for businesses to plan, to strategize.
It's like trying to steer a ship in a hurricane. You need to be on your game. So as we get ready to wrap things up, let's take a minute to really think about what we've learned about CarMax. We've got this company with a history of success, a brand everyone knows, and a leadership team that's not afraid to take risks to innovate. They're making big bets on the future with this full spectrum lending and the digital push.
Yeah.
But they're also facing some really stiff headwinds. Declining used car market, uncertain economy, it's a nail biter.
It really is. It's all about weighing those potential rewards against the very real risks. That's investing, right? Gather your information, do your research, and then make the decision that feels right for you and your goals.
Couldn't have said it better myself. And that, my friends, is why we do what we do here at The Deep Dive, giving you the knowledge, the insights you need to make smart decisions. But before we say goodbye, I got to leave you with one final thought, one more question to ponder. Let's imagine CarMax sails through all this. They come out stronger, more innovative. They become like the undisputed champion of the used car world. What then? What does the future hold for a company like that? Could they be on the verge of something truly remarkable?
It's a question worth asking, and it's a story worth watching.
I completely agree. And that's the beauty of the business world, right? It keeps us guessing. Always something new, always a challenge, always an opportunity. So stay curious out there. And as always, keep on diving deep with us. It's amazing what you can learn in like 45 minutes, right? Yeah. We just took this deep dive on CarMax and we uncovered a ton about their business, how they make decisions, the whole market they're operating in. It's fascinating.
It just shows you got to dig deeper, right?
Yeah.
You can't just skim the headlines. The real story, the good stuff, it's in the details.
100%. And that's what we're all about here, right? Giving you, the listeners, all the angles, all the insights so you can make up your own mind about CarMax. Good investment, bad investment. You decide. But before we go, let's just recap, the big takeaways, We talked about their recent performance, how they actually sold more cars, which is pretty impressive considering the used car market is, it's a mess right now.
And we dug into their strategy, this whole full spectrum lending thing, their big digital push. These are not your grandpa's used car moves. This is CarMax adapting, evolving for the future.
Exactly. And remember those analysts? Some were like, buy, buy, buy. Others, not so much. We broke down why.
Well, we talked about the good, we talked about the bad, the declining used car market, the crazy economy. CarMax is dealing with a lot.
And through it all, we kept coming back to that big picture, right? You got to zoom out, look at the whole market, the whole industry. Remember that Bolkowski.com checklist. Even the best companies, they're not invincible. The market can make or break you no matter who you are.
Truth. Investing, it's not just about picking companies you like. It's about understanding the whole playing field, the economy, the trends. Everything matters. And most importantly, stay curious. Keep asking questions. That's what the deep dive is all about.
Yes. Couldn't have said it better myself. Well, that's all the time we have for today's deep dive. Thanks for coming along for the ride. Keep those brains engaged. Keep asking those tough questions, and we'll see you on the next one.